Hey everyone, welcome back to Corporate Decoder. Today we're diving into NOVANTA Inc's latest filing, which might sound as exciting as watching paint dry, but trust me, there are hidden stories in these numbers. Just like finding a winning lottery ticket in your old winter coat. This filing outlines everything from executive pay to potential risks, and we're here to decode what it all means. First off, this is a proxy statement, meaning it's all about the upcoming shareholder meeting in May. Shareholders get to vote on important stuff like who sits on the board of directors and how the top executives get paid. It's like a popularity contest, but with real money and company control at stake. If you're a shareholder, this document is your cheat sheet. Speaking of the board, there's an election coming up. 9 people are nominated, from seasoned veterans to some newer faces. They need your vote to stay in charge. Reading their backgrounds, it's a mix of experience in medical technology, finance, and general management. No drama here, just a list of qualified folks wanting to run the show. The board itself is recommending everyone votes for these nominees. It's usually a good idea to do your own research, but this is a pretty standard rubber stamp kind of situation. Unless there's a major scandal lurking, these folks are likely getting re-elected. Now for the juicy bit, executive pay. Shareholders get an advisory vote on whether they approve of how much the big bosses are making. It's non-binding, so the company can ignore it, but a big no vote sends a strong message. Essentially, they're asking shareholders to say if they think the executives are worth the money. This is where things get interesting because it reveals the company's priorities and how it rewards its leaders. Next up, shareholders get to weigh in on how often they want to vote on executive pay: every year, every 2 years, or every 3 years. It's about how much say shareholders want to have in keeping executive compensation in check. The board is recommending voting 1 year. Makes sense. More frequent check-ins keep everyone accountable. Time for the accountants. Shareholders are asked to approve Deloitte & Touche as the company's independent auditor. This is a pretty routine matter. The report mentions a change from PricewaterhouseCoopers LLC, which isn't uncommon. The important part is there were no disagreements with the previous firm. That's a good sign. Looking at the fees paid to the auditors in 2024, the company is paying $2,036,000 for audit fees, a decrease from $2,455,000 in 2023. The drop suggests that the new firm is doing the work for less, or maybe the work required was smaller due to some changes. Switching gears, let's meet the executive team, the people actually steering the ship. We see appointments of co-chief operating officers, which is unusual. These appointments seem like a way to focus on medical solutions and automation enabling technologies. Now, governance, the rules and structure of how the company is run. The filing highlights the board's leadership structure, emphasizing the roles of the chair of the board and the lead director. The lead director is independent, which is good, and has a fair amount of responsibility for being a lead director. The filing shows that 44% of directors are women and/or members of underrepresented groups. This is a good statistic. The market and consumers in general expect these numbers to be meaningful. Moving on, let's talk about what the directors themselves get paid. It's a mix of cash and stock. No employees get paid for being on the board, as they are paid their employee salary. The non-employee board gets about $7,500 less plus stock. Being the lead director comes with extra pay, $25,000 annually, reflecting the added responsibilities. Now we get into the heart of the matter, how the executives are compensated. This compensation discussion and analysis section explains the company's philosophy and policies. The key goal is to attract and retain a best-in-class team of talented executives. It's all about rewarding performance and aligning executive interests with shareholder value. Speaking of shareholder value, let's look at how the company's stock has performed. For reference, the Russell 2000 returned 42% and NOVANTA only 12% in the same time frame. Investors might wonder why executive pay is structured the way it is when their own returns haven't been as high as they could have been. We are told that the company achieved a record $949.29 in revenue and adjusted EBITDA of $29.8 million. They also acquired Motion Solutions Parent Corporation. Checking those numbers a bit, for the fiscal year 2024, we have revenue of $949 and $2.27% from the previous year. However, organic revenue growth was down 1.6%. Adjusted EBITDA was $296.2 million. Operating cash flow was $58 being dollars on, up from $121 million, up from $196.2 million. Operating cash flow was $156.2 million. Operating cash flow was $158.5 million, and dollars off 78.5 $86.2 million. Operating cash flow was $158.5 million, up from $120.1 million, up from $126.2 million. The senior management incentive plan SMISA includes cash incentives that are earned based on the achievement against 2024 organic revenue growth rate and adjusted EBITDA target. The actual payout was at 48.6% of the target bonus amounts. This shows that they are at least being held accountable. Another key is the clawback policy that says if they get incentive money based on faulty numbers, they have to pay it back. It's like the company saying, we're watching you, and if you mess up the books, we're coming for that bonus. Finally, let's see who owns the company. BlackRock and the Vanguard Group are the big shareholders with over 10% ownership each. This means they have a lot of influence. It is also good that our CEO also has a lot of skin in the game. BlackRock owns 12.7%. Mr. Glastra owns 191. Looking at the equity plan information, we see there are 623 shares to be issued upon exercise and 1,678,372 securities available for future issuance. This indicates plenty of flexibility for incentivizing employees and future equity-based compensation plans. One small detail here is that Section 1610 compliance was almost perfect. It was discovered one report had been missed, but that's okay, at least now it's out in the open. So what's the story here? Novanta seems to be performing decently, with revenue growth, even if organic growth is a concern. Executive pay is tied to performance, at least to some degree. The company has good governance measures in place with a diverse board. Big institutional investors like BlackRock and Vanguard hold a lot of power. Overall, Novanta is heading in a reasonable direction, but needs to focus on its organic growth. For me, that is where investors should focus in on and what they're most concerned about. While there are a lot of tailwinds that can help its financial results, it can only coast on it for a certain time. If you found this analysis helpful, please hit that like button and subscribe for more corporate deep dives. Let me know your thoughts in the comments.